What's going on, guys? Mike, aka Crypto Jewels. I'm going to do a Bitcoin update, BTC. Price action right now is pretty sloppy. It's looking very, very choppy. And if you are trying to trade this, you could very easily be getting chopped up. So for those of you guys who follow me and who are in my Discord know that risk management is the one thing that I preach the most when it comes to trading any kind of asset, but especially crypto because it's so volatile. If you guys do not have a risk management plan, you have to have one if you're going to be trading this. If you don't, then you're just gambling, or you are just considering yourself an investor, and hopefully you didn't buy the top and are now uber underwater. So I highly, highly recommend a risk management strategy. I've got a link to my free risk management guide down below. Check a peek at that if you guys want to get my free guide on risk management, because that is, again, the most important fundamental part of trading. All right, let's hop into the charts, guys. As you guys know, I'm not a financial advisor. I do this for entertainment and educational purposes only. So don't blindly follow anything I say or do. So for those of you guys who've been following me, you know that my macro thesis is that this entire structure, this is on the daily chart, by the way, this entire structure from this point down to here is a corrective structure from an Elliott wave standpoint, meaning that once this whole structure is completed, we will have one more wave up, because we've got a 1, 2, 3, 4, and we'll have a fifth wave up to, 100K plus. So that is my macro thesis. That thesis is hanging by a thread right now, which doesn't really bother me per se. But the most important thing is to not marry a bias. So I'm not going to live on this thing and die by it. Once I get invalidated, then I will have to reevaluate my count and figure out what is going on, and try to understand Bitcoin from a different macro perspective than the way I see it now, which is not a big deal. As a trader, that's something that you should be getting used to. That's something that you should always be doing, is knowing all the different pieces of the puzzle, where your validation levels are, your invalidation levels. You should know all of that. And I am getting close to my invalidation level. If you look at this thing viewed out on the daily here, to me, this looks like it could easily be a completed structure. What I have this as is a WXY with a potential 5-wave down to complete this C here. And so far, we have been holding a possible 2-wave at a 618 retracement. So zooming in a little more, we're going to go to the 4-hour here. This count gets a little sloppy on the micro. I've had it a couple different ways, and it keeps throwing curveballs at me with the price action and what it's doing. Before, I had thought that this thing was going to be impulsive down, and this was a 1, 2, but the way that this action, this price action has developed here, it's invalidated my original count of a 5-wave move down for now. That doesn't mean it can't have it, and it won't happen. It just means the way I had it counted was not correct. So if you're trying to trade this, probably the safest thing to do would be to let this range resolve. And what I mean by that is let it either break to the upside or break to the downside. That would be your safest trade, and your safest bet is waiting for either us to recapture the top of 21,800 and trade above it. And I'm not talking about wicking and getting rejected. I'm talking about actual sustained price action above that level, or a break below 17,600. If we do get our break below 17,006, I have us basically going to, probably around 16,000. If our bottom is not around 15.2 to 16,000, then that will jeopardize my macro thesis and will really start to invalidate that count. So if we do get one more drop, and this happens to be a 3, and this whole structure is a 4, and then we have one more 5 wave down, we really need to hold above 15.2, and then bounce with a impulsive structure upwards in order for me to really confirm my bias and my macro thesis. But if you're just looking to trade this, again, I would either, to play it safe, I would either wait for this range to resolve, or you could always trade the range. You could short up towards the top, it's 21,400 to 21.9, or you could wait for a long down lower. So I mean, that's really the way to trade it if you're looking at trading it. But right now, I mean, ultimately, guys, the price action is just really choppy. From an Elliott wave standpoint, it's extremely sloppy. So it's very difficult for me to get a accurate and count that I find reliable and that I actually like. So just wanted to give you guys a quick heads up on kind of what I'm seeing in the market. So hopefully that helped you guys a little bit. See y'all later.